Hey guys, welcome to another video. This is the float locker. Just gonna go over the strategy on how I am managing this portfolio. So just a recap on what it is. I opened a $8,000 portfolio back in June, just to show everyone, to show people how to trade options and how to use options to grow an account. And I used $8,000 because I feel like it's small enough to show that anyone can do this and bring in income that's worth the time. Usually people just buy stock, common stock, and it uses a lot of your buying power, which is a inefficient way to use your capital. So if you learn how to use options the right way, you can actually bring in some decent money. So if you look over my site, thefloatlocker.com, you see it right there on the screen. You can go through it and see that since June, using primarily an option selling strategy, that I've brought in over 63% total in profit over the past little over 2 months. Well, about 3 months now. So I just want to go over the strategy, what it is, and how you can deploy this strategy, and just kind of follow my blog right here. You can subscribe to it, and every week I post updates, the trades that I put on, the ideas behind those trades, just to give you an idea of how I think on my trading. So everything's transparent. You will see all my profits and losses. If you go to my portfolio P&L updates right there, the portfolio performance, you can go there yourself and you could see all my P&L updates every week, updated daily. So as of this past week, I'm up $5,066 in an $8,000 account. So that's about a 63% update year from June. So okay, so let's get started on this. So the strategy here is primarily selling premium. So just selling options. I'm gonna go to my account here, specifically selling options. If I just kind of expand everything here, you see that primarily I'm selling premium. I'm selling strangles. I buy some common stock here and there if I feel there's an opportunity, like a bullish opportunity, or it's set up on a chart. I do deploy those type of strategies as well, but primarily this is only for premium selling, just to show everyone how to do it. So just kind of give you an idea of what goes through my head when I put on these trades. It's really simple. I look for either a stock that doesn't move much, or an ETF. ETFs are the best, like say XLE. Over the past couple of months, I've collected, if you see right here on the P&L year-to-date column for XLE, you see I made $426 over the past, been traded over the past couple of months. Another ETF that I normally trade is EWW. Just over the past few months, I've made $422 on that, and just those two stocks alone have brought in over 10% of the income on my portfolio. Those things don't even move at all. They just sit there. I sell a strangle, I roll them out in time, and I just collect those credits and just let it decay and just keep collecting, and then eventually you'll start seeing the profits roll in. It's very slow at first, especially for people that are impatient. But if you understand the purpose of this game, you can find it to be a lot more viable strategy than going YOLO on same day expiration calls and trying to catch that big 1,000% move, because 9 times out of 10 you're gonna lose money. So this is a way to consistently build income over time. So I wouldn't be showing this in real time if I didn't truly believe this works. So I've been doing this for over 10 years. I've got experience selling premium, and it works. So I decided to open this account to help people out. So you see here, that's primarily the strategy. So what makes me think on say for AMD, right? What was my strategy on AMD? So I want to use this as a prime example, because not only has it been a stock that has gone against me, but not only did it go against me, but I still profited on it. And now how can the stock go against you and you still profit on it? So if we go to the stock, first of all, you see my current position. My current position right now is a $95-$85 strangle. This has evolved over time. So I'm going to go to the chart and show you exactly how I've traded it over the past couple, or probably past few weeks. So right before they announced earnings on this day, which was July 28th, so over the past month, I put on a $60, $80 strangle going into earnings. They had some great earnings. They gapped up. You can see 77. What I did was roll up the put side, the $65 put side, and try to close that gap, right? What you want to do is neutralize the delta in that trade, because now that it's getting closer to 80, it's starting to breach that strike. So what happens is that your short strike becomes it starts working against you. The delta of that becomes more short, and if the stock is going up, it's going to go against you. So what you need to do is roll up the untested side, which would be the $60 put in this case. And I believe I rolled it up to $75, I believe, or 72. I can't remember exactly, but I left the $80 call strike on. And then as time went on, you can see we breached the 80 strike, and eventually I went to a 80 straddle. So I had the 80 calls, the 80 puts sold on a straddle. By this time, I have collected I collected a good like $10 or $11 in credit. So even though it was trading up here at 87, I wasn't doing too bad. I was actually in profit, and I actually had leeway up to expiration in August, as long as the stock stayed below $90 and above $70, which meant that I had a $10 buffer on each side because I collected $10 in credit, I would still break even by expiration in August. So what happened is that it rolled back over, came down back to 76, and what I did was I rolled out my put strike, my $80 put strike, out to September. And then as it came up back to 80, around this time I rolled out my $80 call out to September as well. So as it traded sideways, I eventually took it off and I reestablished the trade. I felt like I collected enough premium in here, so I went ahead and reestablished the trade. I put on a $80, $95 strangle, and then today I had to roll up the $80 to the $80 put to an $85 put to help keep the portfolio neutral, delta neutral. Well, in addition to that, I saw it breaking out, and I went ahead and bought that call right there. I bought the $95 call expiring in October. So the reason why I did that is because the stock was breaking new highs, and it was doing it with volume and with strength, especially after it's consolidated like that and it's been holding the 8-day moving average. Now this is a part where it gets a little more technical, but I think this kind of helps give you more of an edge. I see it breaking out to new highs, so I turned that call strike into a put spread. So I bought two calls here, the $95 calls, which essentially creates like a 95 calendar debit spread. So it's limiting the risk on my short strike on the calls, but also helping me catch that alpha on the with the extra call. In addition, I have a put strike on, the $85 put strike. I left that on because the premiums are pretty juiced. So in less than like 17 days, I can collect another $200, $2.12 of credit. That's until expiration. So more so, I'll roll it up if it goes down 50%. But we'll see how the stock trades. But since I've been trading this, and even though it's gone against me on a neutral strategy, this whole time I've been profitable. I'm actually up almost $1,000 on this trade, which is hard to believe, especially since I put on the trade down here as a neutral strategy, and it's been really going against me. But by keeping that trade delta neutral helps you. It really helps you keep the losses from really adding up. So not only that, but you collect more credit. You keep collecting the credits, and you just play the game and play the game of time. Wait it out. Eventually, it's gonna rest or it's gonna pull back, right? And then that's where you capitalize, collect the alpha from the tested side, and then do whatever you want. If you want to roll it out in time or reestablish, I decided to reestablish. So now I'm kind of in the same situation again where it's going against me because we're breaking new highs. But I went ahead and threw on 2 long calls to take advantage of that because I think this is going to go for 100. That's just my opinion. But that's just to give you an idea. That's kind of the gist of the strategy. I look at major trends in stocks, and I particularly just go for like a short put strategy. Short puts on this market. The market just keeps going up. So I look for bullish strategies, and just sell puts against it and play that game, right, of time decay. Also, in addition to that, I use very strict risk management. As you can see, I'm only selling 1 lots here, sometimes 2 lot if the stock is cheap enough. But it allows you time to be right, and it allows you to hang in the trade, even if it goes against you, without causing emotion. As this account grows, we'll eventually start upping the size and collecting more premium, but that's within due time, right? So it's all baby steps. You grow, you start taking on more risk, right, and you make more profits, right? So as this grows, this account will grow a lot quicker, grow a lot faster. We'll be putting on bigger positions, but until then, we're just patient and just working it, right? In addition to that, you got to consistently contribute to the account. Not only has this account grown by $5,000 in profit, I've also been consistently contributing $200 a week to this account, which helps me just grow the account by investing in myself. I want to grow this account as fast as possible. I mean, whatever's comfortable with you, that's how much you contribute, either weekly or monthly, whatever you feel comfortable. In addition to that, I look at products with liquidity. You don't want to trade illiquid products. Makes it very difficult. The spreads will cause terrible fills if it's too illiquid. It just stay with liquid products. The big names, big ETFs, big stocks, ones that are well known and heavily traded. That's my only advice. You can trade whatever you want as long as it's liquid. That should be the number one concern when you put on a trade. Is it liquid? Are the spreads tight enough so I don't lose my ass, or I'm not the only one in this trade, right? So that's what you got to think as well. Another thing is just being disciplined, sticking to your plan. If the trade goes against you, you have to decide what are you going to do. I mean, like say this AMD trade has started going against me today. I just had to make a change, right? I wanted to keep the strangle on, but I know how this thing can run, so I had to limit my losses, and I went ahead and put on some long calls, to combat that. So knowing the products, knowing how to use options in a way that benefits you, will help you in the long run. I also have a short put on, a short call. This will help finance these trades. these long October 95 calls by allowing me to collect premium in the meantime, just in case AMD trades sideways, like around $90 for some time. I can offset the premium decay in those October 95 calls by having the short put and call on. So you got to think of time decay here, right? Like when you go long calls or long puts, you got to battle time decay. So find a way to use short premium to help finance that, right? So as time goes on, as you learn how to trade, you'll realize just the tricks of the trade. It's kind of an art, this just trading options, right? It's an art in itself. The more seed time you have, the more you'll realize like how you can create your own strategies that fit your personality, right? So there's no like right way to trade options. It's all about, the only things that should be consistent is your risk management, how big of a trade you put on, your money management. And that's pretty much it. That's all you can control, your size and where your risk is, right? Everything else, you got to just leave it to the probabilities. And we try to trade as often we can to create the law of large numbers. You're trying to be the casino here, right? Law of large numbers. Over time, you will have the upper hand. You will have losses, but over time, the probabilities say that you'll be successful. Between 70 to 80% of the time, you'll make money. So that's the whole point of this. It takes patience. It just takes determination, and it takes the foresight in knowing how this works to not get scared out of a trade. And to do that also is to stay small. So I can't stress that enough. Stay small, manage your risk. Everything else will fall in line. All right. So, the strategies that I use are naked puts. I love naked puts. I love doing naked strangles. Sometimes I do, when I put on straddles, which is the same strike of the call and put, it's usually because, like, say this AMD call, I'm rolling up the untested side until I get up to the same strike as the call side. So it's usually my end point in the managing the trade and defending the trade. I usually end up in a straddle if it goes against me. So usually strangles and naked puts are my starting strategies, and that's usually what I stick with. I do sometimes I do some iron condors, but or put spreads or call spreads, but I kind of don't do these too much in this environment because the volatility has been staying bid, which means it's hard for these to decay as fast as I need them to. They usually stay around the same price, especially if you're selling like 45 days or longer out. They really don't decay until like about the last 20 days until expiration. So I tend, if I'm going to put on a spread, it's usually on a large product, like say like when Tesla was over 2,000, or the Apples or the Rokus, or even like Roku, I'll go naked on that. But anything higher than that requires a lot of buying power, I'll use spreads, and then I'll go like 2 weeks out to expiration, and then that's how I'll play those spreads, because it's defined risk. I want to give it like 2 weeks, and that's pretty much as long as I want to stay in the spread. So either A, it's going to win, or B, is going to lose, and I know how much I'm going to lose on that trade because the risk is defined with the spread. I like to do debit spreads, especially in large products as well. This allows me to limit my risk and just get in a position for cheap. That's pretty much my strategy. That's all I use, collecting premium, just looking to finagle my way into profit, and and just manage it using staying small. It's really that simple. I mean, my day was say for this account, I wake up in the morning, I look at it, I see what needs to be managed. If I need to roll anything out, if I need to roll anything up or defend something, I'll do it within the first 15 to 30 minutes. I usually wait until the first 30 minutes after open to let the market kind of settle. And then I'll start making adjustments for the next 15 to 30 minutes. And then that's it. It's pretty much done for the day. So it works. This strategy works perfect for people that are busy, that don't have time to sit in front of the screens and day trade and all that, right? They have their own other ventures or hobbies or whatever else they have going on, or work going on, and they just want another way to bring in income. So this is a way for you to easily just, set it up, make sure to manage it, a few minutes a day, just watch it. And then, you just wait for time to pass and wait for these to decay and collect that premium. I'm not here to charge anybody anything. I'm not selling any courses. I'm simply just sharing the knowledge and helping people out. So, best to take advantage. If you need help with selling premium, I can help you out. I mean, I'm not going to trade for you, but I'll show you. I'll answer any questions you may have to help you better understand how to do this, because I know it can be confusing. It's actually taken me a couple years to do this, so I know how difficult it can be. But once you get it, it's easy. It's very easy to do, and it's very simple as I laid out. I laid it out. Doesn't take me long per day to manage it, and it's I do it all from my phone. I don't even need to get on my computer. I don't even know how to use. I forgot how to use the Thinkorswim platform. It's like whenever I fired it up, it's just too much going on. I prefer the phone. It's very simple. I pop in my orders. I have a good chart system on there, and it works. So any questions, please leave them below. Please subscribe. Appreciate you taking the time again, and thank you. And until next time.